Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our 3-day Metals and Mining Conference. Our next presentation of the day is from Royalties, Inc. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Tim Gallagher, Chairman and Chief Executive Officer of Royalties, Inc., which trades on the OTCID market under the symbol ROYIF and on the CSE under the symbol RI. Welcome, Tim.
Thanks, Greg. Glad to be here. Okay, we're going to get straight into it. Welcome, everyone. Thanks for joining us. We are Royalties, Inc., a company that's converted from an old exploration company 3 years ago to focus on buying cash flow royalties. Now, we think this is a good and best investment for everybody, and so we're putting it up front that we think people should think of royalties as an asset class, and we'll cover it in the next slide. But because it's a de-risked business model, high margin, low overhead, asset light, and when you look behind where the cash flow is coming from when you get there, then you can look at the longevity. So at the end of the day, you've got this ideal investment, which we are classifying as a de-risked, diversified, uncorrelated growth and income story. So just to recap the industry, which, in some cases isn't even labeled because, most of the time you have to say, are you in consumer, mining, technology, and so on? And public royalty companies are really, in fact, investment companies, and they can have some activity, but in the main, it's the asset management business. It's an investment or portfolio company. So the reason why we're addicted to royalties really goes back to the creation of the brand, I would say, back in 1983 with Franco-Nevada, starting as a $2 million company or shell, and of course now it's turned into a $60 billion company. Wheaton Precious Metals is a $70 billion company. It also started as a shell. So most of these companies in the mining business started that way, and you can see the returns have turned into hundreds of millions of market cap, if not billions, and ultimately that's why we're addicted to the idea. Now, when you look at some of the other industries, when you use the generic idea of allocating a percentage of your portfolio to royalties as an asset class, you'd say, well, you want a cash flow backed by something, backed by metals in the ground. In case of the mining industry, the handful of oil and gas ones that have been good stories as well. There's business royalties. Generally, there's more moving parts on that and limited growth, and especially when you look at restaurant royalties. Again, good diversified percentage of revenue, generating a decent yield, but probably not the same capital gain upside. So the remarkable thing when you simplify it is that these gold royalty companies have driven a yield that's down under 1%, which is basically saying for every $1 million in cash flow you pay out in dividends, you're getting $100 million market cap. So if you can create that kind of cash flow, even $1 million, then your goal should be to get to 100 million in market cap and continue to diversify. So, moving to the next slide. So as far as the background on Royalties Inc. goes, we transitioned and changed the name in 2022 from just the mineral exploration business, which was focused on a silver asset in Mexico called Bilbao, and essentially trying to combine the idea of getting these longer term streaming income royalties, because as you'll see, the music royalty business is 100-year mine life. Now, Royalties Inc. is looking to sell its Bilbao project, and for a minimum of at least $3 million. The silver price has gone up, and we know from our experience in the music royalty business, we've been able to buy it at kind of an average of 7 times cash flow. So that would generate a significant amount of cash flow and work our way into paying a dividend. Now, again, going back to the genius of the royalty model, it's a passive income strategy at at one point, if you've got growing cash flows, then you can increase the dividend, increase your portfolio. These are all the particulars of our company. Really, no debt, no payroll, just the cost of being public, the audit, and so on. We have 250 million shares outstanding, but it's really well held by a core of loyal long-term shareholders. So we've got about a $15 million market cap at this point, Canadian, 7 cents roughly right now on the Canadian exchange, CSE, and about 4 or 5 cents on the OTCID with our symbol ROYIF. So this is this sort of simple summary of our eclectic strategy, which deserves an explanation in each category. So the one that probably has the most interesting, unique upside is our lawsuit against Capstone for this 2% NSR on the poultry claims in Zacatecas. So, after our involvement at the beginning of the Metalla story, and we were starting to use Xtierra and the former name of Royalties Inc., we bought this royalty on the 5 poultry claims, which covered mostly the southwestern part adjacent to the Cozemin mine, but a key part of it was over top of the production. So we were essentially unaware that they had transferred the royalty to themselves, without notifying the owner who we had bought into, the company Minera Poultry. So we initiated a lawsuit back in 2021. We were validated by the court system after the 4 years in June. Subsequently and naturally, Capstone appealed in July. So we're waiting on that process. But when you do the math, looking at the royalties that Cozemin has paid going back to 2010 or so and went into production in 2006, we think they owe us about $8 million on the production from the part of the Poultry 1 claim, since at least 2019, perhaps even before, because as you'll see in the further slides, then you can see a lot of production at depth. So there's sort of three components to what we think is the value of about 25 million. There's what they owe going forward on the existing production plan, which is sort of a 10-year mine life. And then, of course, there's the depth potential going down below 500 meters. And ultimately, the Paroquia, or the southwest part, and the rest of the Poultry 1 claims, they have substantial copper. We've got a rock that was sampled going back to 1999 on our website that shows 30% copper. And of course, I think most of us are believers in the increasing pricing for both silver and copper. So that obviously would increase the value yet again by the time we get to the settlement stage. So that's asset one, really an asymmetric upside from the results of a lawsuit and the collection thereon, and of course the redeployment of the capital. Number two, the legacy asset, Bilbao, which is really a polymetallic, originally it was a third, I think, between silver, zinc, and lead. And of course, with the increase in the price of silver, then it's more of a silver mine at this moment. It's become more interesting this cycle. We spent 30 million Canadian going back in the period from 2008 to 14, 5.5 million ton deposit, sort of $100 rock, which is probably $150 rock now, and costs have increased. But the part that's interesting is, apart from being in a great state, you can see in this map, the location is about 50 kilometers east of Zacatecas, but it's also located 18 kilometers west of the biggest new mine going into production, run by the two best Canadian mining companies, Agnico Eagle and Teck, in a $20 billion plus deposit. So being in the neighborhood with that kind of profile, it hasn't been permitted yet. Hopefully that permit happens next year. And then there's also a small private silver producer across the road called San Jose that used to be under the Aryan Silver public label that's owned by Quintana Resources. And if you simplify, their situation, or somebody like that, even if you just said, you've got a company that's doing 1 million ounces a year of silver, which also could apply to us, then, if costs were around $20 an ounce and all of a sudden you've got $50 an ounce silver, then you've all of a sudden run into a bonus $30 million per year in cash flow, which is pretty exciting. So we're working ongoing on trying to figure out the best way to monetize that asset in this sort of high-priced silver market. Third asset, which is distinct, but we're trying to bring to the market the idea, the first investable diversified portfolio of all those billions of dollars of streaming cash flow coming from the world that's really held by private rights holders, songwriters, composers, and so on. So over time, we've invested $2.5 million Canadian, more or less to generate about $200,000 in dividends that covers the overhead to keep essentially the company on an even keel, which is really ultimately the secret sauce to the royalty model. Because if you've got all the upside, you've got no overhead, you've got no debt, you've got no employees, it's pretty hard to mess up that investment, because as I said, it doesn't have operational risk. It's a portfolio. So increasing these global brands that we've been able to acquire interests in, songs from the Rolling Stones, The Who, Kinks, Dire Straits, Rihanna. If you look on your Spotify, which is the best way to see it, under view song credits, you'll see that there's 5, 10, 15 owners on every song. So it's akin to the world of royalties, where somebody's got a 1 or 2% NSR. It's just in this case, it's a 1 or 2% on the revenue, of a hit song. So drilling down a little bit in terms of the catalyst on the silver side, which is, I think, the number one catalyst right now. It's remarkable to think that, in this century, since the dot-com crash, silver's gone from $4 to $48. It's 12 times higher. I think the gold price has cracked $4,000 in the last 24 hours. So it's gone from $250 an ounce. So it feels like, to people in the business, like it's taken a long time, but the reality has been a spectacular return. These precious metals pricing, and obviously the companies have started to take off in the last year or so. So that just changes the economics for everything. But going back to why silver is so interesting, apart from being a relatively small market, the production of silver has sort of stagnated at about 800 million ounces. I think investment demand's about, and industrial use is about 1.2. There is some recycling, but it's essentially been in deficit for the last 5 years. And it's all these new markets in terms of the electrification of the economy around the world, solar and electrical, and even unfortunately the use in missiles. So it's kind of this time bomb in a certain way, heading for another spike that may further crack the $50 highs to 1980 and 2011. But certainly that seems like we're on the doorstep of that now, and it's, in my mind, very likely that it'll double again through $100 for all the reasons I just mentioned. So silver affecting our fortune, whether it's from the royalty side. Even in the case, we don't really ever think about it that way, but if we sold Bilbao and took back, or had the royalty on Bilbao in production, then that would potentially create a second mining royalty cash flow. So just to cover Bilbao specifically about the historical issues or the challenges, back in 2014, when we did the RPM PEA, it came up with a 2,000 ton per day plant size, 8-year mine life. And at the time, the 3-year average of the silver price was $30. And of course, it proceeded to go down to 15 and below. And now it's cracked up. So we're essentially up 59% over that original assumption. Zinc, surprisingly, is also up quite a bit at $1.40 over the original assumption. Lead's down 11%. So overall, the revenues would be higher, but we think not having done the engineering or the model update yet, which we're working on, just being conservative in this example, back of the envelope finance person saying, well, if the operating costs on a small mine have doubled, over the last 10 years, then it would still be not a super exciting cash flow, but one that is definitely back and break even relative to where it's been in the last decade. So other strategies for enhancing value is just to do a smaller plant size, reduce the capex, try to increase and high grade the operation. Probably one of the best ideas came from Peter McGaw of Mag Silver fame. He said, well, you could use our high grade sulfides as potential startup ore on the San Nicolas plant down the road, which is, another interesting idea, let alone working with the neighbors. So there's a few ideas that will enhance the value of that property. Now, switching to our big potential lawsuit story, just to give you some background before we go to questions. And some of you have seen these slides before, but the reason why it's so obvious in our minds is these are all essentially maps coming from Capstone's 43101s. So it's just a review that you can look at and see in the PowerPoint at your leisure and ask us questions, go to royaltiesinc.com. But essentially the original East-West mine up here was mined out going back to 2010. They discovered the Malanocha, in quotes discovered, because they drilled a hole probably in this, around this area on Portree, because they had a joint venture one hole in 2005. So they've been aware of the sort of potential of the Portree going back that far, 20 years. And then a couple of years ago, with David Garofalo's new Gold Royalty Corp, they acquired these two claims from Endeavour Silver for $7.5 million back when silver was $20, generating a $750,000 cash flow that was last year $1.25 million. So when you talk about our claim related to just this portion here on the postage stamp with all this potential for the future, that's why we think it's highly valuable. But the proof of the number of what they owe in our minds relates to what they've been paying, in the last few years. So last year, according to the audited financials of Capstone Copper, they paid $4.4 million, and 1.25 of it, went to Gold Royalty Corp, and 3.2 of it went to Grupo Basis, which is curious since, in my mind, they had been mostly mined out in those parts, except for perhaps this piece. So we're monitoring that side of it. So there's lots to discuss in all these slides, but just to give you more versions of it from their 3D drilling and resource from their 43101, and you can see it on the internet. It's probably faint, but the resource underneath, on the 3D that shows, the Portree part, where they've been mining, again, you got about 1.5 kilometers plus from the San Roberto shaft and the mine. Essentially, our piece is right on top of the tailings pond, or right underneath the tailings pond. So when you go through these slides, this is probably the one that really stands out for me, because you're essentially saying, okay, well, we talked, as you see in the press releases from 2019, 2020, you can see they were drilling up here, but then it's a little curious when you've got all this part mined out. So, what do you say about somebody who's been mining on your property without telling you? So these details show, before we realized there was a conflict, they were highlighting the Portree area, highlighting the drill results, having access to the Portree claim block, because they had finally bought the actual claims from a local named Raul Gonzalez, who's part of the lawsuit. And, they were very excited about it. Over the next decade, the best is yet to come. So again, you can do the math on the tonnage back of the envelope, which we did with a professional geologist with some fame in Zacatecas, and he came up with a $25 million valuation for this Portree value. So want to get to questions. So I'm just going to get to the end. You can see all this part is just highlighting a version of how we try to calculate or estimate without Capstone's cooperation on the amount that they owe us. And then just to finish quickly, which is not the focus of today's presentation, but our acquisition of $2.5 million worth, or about 5% of music royalties, which is generating, dividend income of $181,800. progression here over time, increasing the dividend. Portfolio has gone from no catalogs to 31 catalogs, 7,000 songs, and Music Royalties has paid out over $12 million since we started paying dividends in 2019 in 68 monthly dividends. So I'm going to try to switch to questions. I think I covered the question about the area that's highlighted in those slides. That's the Portree 1 portion that's in production, and how we come up with the $25 million valuation. But again, that's all subject to internal records from Capstone. As I said, I think it's summarized well in one sense, to the extent that you believe that their accountants are doing the job, and it's audited financial statements of the portion that they've been paying out, which is more or less averaged $4+ million for the last 15 years. Okay. I'm just going to start looking at some of these questions. So what do we got here?
I think so. Most of the questions have come in regarding royalties, but I was just thinking maybe start with the two questions regarding the mining assets. So the first one is, can you describe the areas which have been mined out on Portree 1? Because some people couldn't see your mouse on the screen.
Okay. I think if I can go, whoops. Hopefully this helps. That's one of the slides that's on the PowerPoint, and you can download the PowerPoint to sort of go through it at your leisure. But you can see it's right smack in the middle of what they've been mining on this Malanocha footwall zone, which is this northwest southeast portion. So we're estimating it's upwards of 30% of that structure, and so it's you can do the width and the depth, and you can look at the grades. Going back to the first slide that shows you the aerial, the aerial version. Then you're saying this is the Portree 1 part. Even though the big part of Portree 1 is over to the west, it's this part that's the red square that's below the yellow dashed line headed into the gold royalty part. So,
which is in purple. And second question regarding the status and expected timeline for monetizing the Bilbao project. Is there a timeline for monetization?
Well, we've been looking honestly for years. The reality is that with the lower silver price, it wasn't interesting. So the interest in my mind is really just starting. If you think about it, we started the year at $30 silver, which is the base level. In my monthly reports on the CSE, it wasn't going to get interesting until we were sustainably above the $40 mark, or bringing the rest of the world in when we hit the old high of $50. And that, of course, is remarkable when you think about anything that hit $50 back in 1980, 45 years ago. So it could happen quickly. It's dependent on the funding or the rolling of profits. I mean, you've seen some amazing silver stories up. Vizsla, which is 3 hours west of us, has gone from 15 cents to $6. So as soon as investors start to think about rolling the profits of these things that have gone up hundreds of millions of market cap, and it trickles down to properties that are levered like ours to the silver price, being a lower grade, because we're effectively 2-ounce silver in this situation. So I certainly expect it to happen over the next few months. When you're talking about, by the way, the timeline on the lawsuit, I mean, I don't think anybody can predict, any court in the world's timing. And so I'm going to say the new set of judges, basically they have one judge that's the point person that's got to read all the documents that have been created in the last 4 years. It's about 1,000 pages. And then they sort of talk amongst themselves and make a decision. So, I mean, realistically, nobody can say when that will be, but it's for sure, sometime in the new year at the earliest in my mind. when we get visibility, we'll provide an update, in a press release. Next question.
In terms, how are royalty companies valued from an investor perspective?
Well, I think I'm going to go back to our new exciting chart that Connor created here, where you say, precious metals companies are ones that are exposed to the gold and silver price upside, as a proxy, I think, from, not holding gold and silver directly, which has the storage cost, the insurance cost, doesn't have the same growth, just the price increase, versus, owning the mining companies. I mean, they've proven over time, and I think that's why it's amazing to see that when the ones that do declare a dividend, I mean, we even experienced that at the beginning when Metallo was paying a dividend, that as soon as you started to pay that monthly dividend, you got a 1% dividend yield, which obviously drives a massive capital gain, because at 1%, of course, you're essentially saying the market cap, is 100 times cash flow. So it's a special brand, I think, compliments of Seymour Schulich and Pierre Lassonde and so on. And over time, we've obviously got 29 companies listed here. So everybody understands that model. When you look at things like oil and gas, and it's much more volatile price. I mean, we talk about, by the way, gold price being volatile, but in my mind, it's nowhere near as volatile as other things. It's always mislabeled. It went up like a rocket because it went up, $40, on a $4,000 price tag. So business royalties at the next category, when you talk about the risks that they have, I mean, there's a lot of moving parts. There's no real moat behind it. I mean, having 10, 20, even 50 years of resource in the ground, even though eventually it's all depleted, so practically speaking, I think to answer the question, the dividend yield is a relevant factor to valuation. I think the NAV, where you say they've got most of them have way more developmental royalties than they do have cash flows. I mean, Franco only has 100 cash flows. That's the other point I don't think I made, is that entire group that has 176 billion, if you add up their actual cash flows, I don't think it would even get to 1,000 actual cash flowing royalties. So
and also just to add on, I think there's a bifurcation between business royalties or restaurant royalties versus royalties that are tied to property, because the mine could go out of business. So let's say you have a royalty on a Barrick gold mine. Barrick could go out of business, but your royalty is associated with the actual land. So you are on title, right?
Yep.
Versus with a business royalty, it's your cash flow is confirmed by the operator, and people have to go into business in order for your royalty to generate money on a business.
Yeah, thanks for that. And I think the uniqueness of the trust structure for royalties in the terms of the restaurant is that they're not taxed as corporations. So the money's a flow through. So they tend to have the higher yields for that reason. And in some cases, it's also because it's a return of capital. Next question.
Just on this topic, there was a question about the deck highlights a large valuation gap versus established royalty peers. What are the main drivers behind this discount, and what specific actions is management taking to catalyze a market re-rating?
Well, I think the main thing that you've seen with all of these is you need to have a decent amount of cash flow that stands out. So getting through at least $1 million worth of cash flow to be positive cash flow, let alone to declare a dividend, I don't think it has to be huge, because as I said, even the ones that had $1 million, if you get a few $1 million, I mean, we've seen some of these things taken out at 300 or 400 million market cap already on a cash flow or two. So, I mean, that's where all the money's made. Even if you go back to the beginning of Franco, it's that transition, where we're at to achieving those two milestones. And so getting the capital from Bilbao or getting the cash flow, from a Bilbao royalty or a Cozamin royalty, is the main driver to significant re-rating of the company.
And then I've seen there's a couple questions on what is your criteria on acquiring new royalty streams?
Yeah, we're at the end of our time, but the criteria is basically you want a long-term cash flow. If we can pay 7 times cash flow for a 14-15% yield, that's the main focus. Any cash flow that gets you into this portfolio, which is why we have the generic title. But we're at the end of our time, so I thank you for attending, and please ring out or email anytime with subsequent questions. There's a lot to take in, but it's a 3-asset company, so you have to digest each of these investments that we've made. Thank you.